to the Get Ready podcast in partnership with Insurance Nerds. I'm pleased to be joined again today by Max Schmitz. In this episode, we'll be discussing the impact of COVID-19, the coronavirus, on the insurance industry. Max joined DI and LTC as a third-generation DI specialist in the bottom of the recession in 2009. And here we are again, Max. Welcome to another recession.
Hey, how are you, Tony? Yes, thank you. I would like to say happy to be here, but in that context, not so much.
Yeah, well, you've learned a lot and you bring some great lessons, so it's great to have you back again.
Thanks a lot. Yeah, no, good to be here.
So just a little bit about Max is he developed a specialty in working with CFPs and RIAs to consult and implement proper disability insurance planning for their clients. Max and I also co-authored the questions and answers on Disability Insurance Workbook. So Max, let's dive on in. Can you tell us just a little bit about what you do?
Yeah, so I essentially advise advisors is really what it comes down to. So work with a variety of advisors, insurance advisors, like you mentioned, RIAs and CFPs who just have a broader holistic sort of value operation that they bring to their clientele. And in doing so, you know, a lot of them have questions about the disability insurance. Certainly you can't be an expert on all things. And so you got to rely on experts in one specialization. And that's me on the disability income and also the long-term care side. So that whole broad disability spectrum is really where we sink our teeth in and can help build case design, even help with some marketing, prospecting, identifying viable opportunities in that space and helping clients stay protected and give them income streams when they need them most.
Fantastic. Well, I know you've been a great resource for me when I was doing some consulting. So you're doing some great work. So, you know, let's dive on into the subject matter of the moment. You know, what's going on for insurance companies right now?
It's a very fluid situation, as I'm sure everybody can sort of anticipate. You know, I was encouraged to see a statistic the other day put out by Munich Re that 90% of financial services institutions had a pandemic response ready.
Oh, fantastic.
It didn't really feel like it, though, I have to admit, in terms of their communications. You know, financially, from a stability standpoint, I think they're all good there. Obviously, I'm not looking at the balance sheets of everyone, but from everything we've been hearing, I mean, this is the financial stability portion is not a massive concern at this point in time. You know, I'm not speaking for every carrier, but just from a broad scale perspective, it looks like, you know, they've planned for this. But as far as communications go and rule changes and things like that over the last couple of weeks, a lot of them have been pretty slow to respond meaningfully. Of course, everybody said, okay, yeah, we're going to do what we need to do to keep our employee health and everything like that in good order, which obviously is the bare minimum. But, you know, as far as what they're going to do with extending grace periods and underwriting changes, because you can't schedule an exam if your life depended on it in some cases here in California. So we've got a lot of changes that came pretty quickly but also sporadically. You know, it's just sort of like things kind of popping in the air, trying to see where they all lie. And they haven't been equal, which is sort of interesting.
Definitely. You know, I think that's what's interesting. And I think that's going on overall with everything. I feel in my personal life that everything from my son's school to everything else, it's been boom, boom, boom. And, you know, that people are just starting to get a sense of how our lives are going to be over the next few months. And it's probably what's going on with the insurance companies is, what was the saying is, you know, everybody's got a plan until they meet the enemy.
Yeah,
Something
exactly.
like that. Have you heard that saying?
Yeah, or the Mike Tyson one, you got a plan until you
Oh,
get
yeah,
punched.
that's it.
Yeah.
I love that.
And that's it. I mean, we're all trying to figure this out together.
Definitely. So, you know, let's talk. You know, let's break this down just a little bit. How is it impacting the underwriting process right now?
So on the bright side of the spectrum, I would say, you know, we're seeing some really aggressive and I think welcome responses to this. Couple carriers sort of came out boom boom with and met pretty similar guidelines, where we're looking at $10,000 a month for individual disability insurance with no exams, no labs. So it's a much more streamlined, as we say, non-med or simplified issue process. You're still looking at APSs in many cases, and this is on the life insurance side too. You've seen they're going to waive those exam conditions if they can find blood work within the last 18 months within your medical records, and if not, they're still going to have to schedule the exam. So the devil's in the details, but with regard to the DI, it's $10,000 a month right now. With no exams out the gate, and that's all ages for some carriers. Other carriers are imposing restrictions based on age, so you're seeing maybe a maximum of $6,000 a month for anyone over the age of 45. But all in all, it really comes down to what the application looks like. So if they can answer those medical questions or the tele-app questions cleanly and without much medical history, then I think we're going to have a lot better chance of getting all the way through without an exam. So definitely be sure to pre-qualify is the name of the game. But aside from the individual disability insurance, I've actually been really encouraged to see what they've been doing with the business products as well. And these domestic carriers, those who issued the $10,000 max on the non-med for individual, are also showing $25,000 a month non-med for business overhead expense. And I think that's really a special, maybe this isn't coming out the perfect way, but it's sort of a special pain point right now, I think, as we're seeing small business landscape just sort of crumble. Unfortunately, obviously, this is incredibly dire time, and you have to be especially careful with how you're introducing these subjects. But at the same time, it's so evident how dependent we are on a basic income stream, and what happens when you can't maintain your regular expenses due to, obviously our policies don't pay in the event of pandemic unless there's going to be a diagnosis. And I think we'll talk about that in a second, but you can equally see this, a non-COVID situation where the business owner, the rainmaker of a small agency or dentist office or something, or veterinarian's office is no longer able to participate in the day-to-day because of cancer diagnosis, back issue, something musculoskeletal, or anything else like that. So there's not just one, pandemic insurance, but, we need to be thinking broad scope. All right, what are some of the dangers to this business from operating? And it comes down to, a disability scenario, and BOE can really help. And then the third one was the buy-sell coverage. And not a lot of people have buy-sell insurance on their disability risk, but as you know, a lot of them have buy-sell agreements in place, a lot of partnerships, and those that do typically have a disability clause where you have to fund it in the event of a permanent total disability for your partner if they become disabled. So this is a funding mechanism, and now we can get non-med insurance up to $1 million for buy-sell cases in the United States. So pretty special time in a way, but obviously don't like the circumstances around it. So yeah.
Yeah, well, I think you have the plus minus of, that I think people are acutely aware of the need, but at the same time, the question is paying the premiums or taking on a new financial obligation is a big balancing act. So, to drill down on the underwriting, over the years, I've heard different things like, that over a 10-year period, that the results of a medical exam don't really matter that much, that underwriting has become much more complicated. Do you think that some of these things that are being implemented, since the carriers are willing to do them so quickly, do you think that some of these changes will be permanent?
Oh, that's the hope from distribution side. We want to really disable as many barriers as possible to this process. People need this stuff first and foremost. And so the more obstacles we put in their way, obviously, the fewer cases we're going to be able to get where we can actually help somebody and deliver impact. So, I would love to see it go away from that standpoint. I, don't have the depth of knowledge on the underwriting side to really understand when and where exams are super important. I think they would, I think they serve a purpose for sure. I mean, especially somebody who hasn't seen a doctor in 5 years and has some medical history or something like that. This is an easy way to get a checkup without actually going to do a physical checkup with a doctor or something like that. So there's a purpose for them. But if somebody's has everything in their records, and certainly we're going this way with EHR, electronic health records and stuff like that. I mean, it's all there. Like we're getting, and also you're asking application questions too. So you're getting that information once with the application, twice with the exam and labs, 3 times with the medical records. It's like really, and then there's an MIB check too. So how many times do we need to collect the same information? Yes, there are differences and things like that, disparities within the reports, but I think we have a pretty good collective picture with just the MIB, the app questions, and the medical records already. So I'm hopeful, or I should say, yeah, I'm hopeful, but not overly optimistic in that case.
Well, actually, as you talked about that, I was just thinking about over the years, how many times I've had a client who's had an underwriting complication because of something that's arisen in an exam, as opposed to how many issues have arisen because of something in their medical records. And pretty much everything I can think of that's come to mind has been medical records. I mean, is that what you guys experience when you have clients who don't get policies approved?
Absolutely. I mean, it always comes down to something that was tripped up in the medical records, and it's something the client forgot about because it was so minor, or there was some follow-up testing that just never happened because it didn't feel like an issue, or is it something they could easily live with? So that's usually where you see the trip. It's never in the exam. So I guess to the opposite point, an exam can sometimes clear somebody when there is a question about their medical history. So it can be there to support the client's case. And I think that might be the way to view it going forward is, okay, well, maybe we can just run a quick exam to sort of clear the air on this particular issue. But to make it the default seems like overkill to me. And I hope that that's got a little bit of residual staying power after this is all said and done. We can keep some of these practices in place.
Definitely. One of the other things that I've noticed is that insurance companies all of a sudden have flipped the switch on for a lot of the electronic component of gathering applications, issuing policies. Do you see that overall with multiple carriers? That all of a sudden they've figured out that you can use DocuSign for things?
Oh my gosh, yes. We've been beating the drum together, both of us, for years on getting just an e-signature, viability with some of these carriers. And 2020, or I should say probably end of 2019 was a huge benchmark year for us in that sense, because now we do have multiple carriers on the DI side that are finally able to accept e-signatures. DocuSign is really the main one. Some of them are still limited to just DocuSign. But, we're good with that. We'll take what we can get. Took enough sweat and tears to get to this point. So we're chalking it up as a win. But the e-delivery stuff, it was funny. Some carriers started with that before they opened up to e-apps and e-signatures. So there's a few of them put the cart before the horse in that respect, but we're seeing e-delivery with pretty much all of our DI carriers right now. I'm trying to think if there's any exceptions. None really come to mind right away, but the LTC side is still slow on the uptake on that front. But you still manage. The one key piece that I think has been missing through this process is the electronic APS fulfillment. That has just not happened. They've got some really analog gatekeepers on that front, and that barrier is just getting torn down. We've got some pilots going on right now with DI carriers that are using this electronic health record platform through a service called Human API to collect that data. And that's bringing I literally just had a 3-month APS. Took 3 months to get it from a big medical facility here in California. And they could scale that down to 2 days. So, I mean, that's massive for clients in terms of just keeping business flowing and headaches away from our clientele. So, yeah.
Definitely. So, well, maybe, from that standpoint, this could turn out to be a good thing for the industry, is that the industry could find out that, hey, some of these things aren't going to hurt, and we can actually
Right.
use some of them. So it's exciting. So, we've only got a few more minutes. I think the other big issue, and you touched on it briefly, is, what's going on with claims for DI and LTC and from the life side.
Sure. I mean, it's so interesting to have this conversation, because I feel like one of the Achilles heels, one of many in the DI realm, is that it's been a gray area in terms of how claims are processed. There's not a whole lot of clarity from a consumer standpoint, just in the general populace. And that's because every disability is a dynamic situation. In this particular setting, that's a good thing, because, it's one thing to have a list of codes and medical conditions that get paid out in health insurance. And that's how I would love to see disability run in the future. If you get a diagnosis, you enter this code, which is from, the medical billing team or whatever, and then they pay out a claim based on the fulfillment of the code. So you can put it all on the blockchain. That would be ideal. So you just exercise, claims culture completely. But instead, now we're looking at a situation where you've got, COVID-19, it doesn't really, that means different things to different people based on your health history and things like that. So, or you could have a compromised health history and walk away in a couple days and be just fine. Meanwhile, we have people with maybe one thing going on, and, they're unfortunately not going to make it. So there's just a massive array of how this can really go down. And, with regard to disability insurance, it's based on your ability to do your job at the end of the day. And if you can't do it, if it's because of coronavirus, or if it's because of MS, or if it's because of a shoulder issue, it depends what your occupation is. But if you're limited due to your medical diagnosis, then the claim should pay. And every case, again, is different. So you got to go through the claims process. But at the same time, that's what this stuff is for, is to protect you if you can't work due to an illness or injury.
Definitely. No, that's really interesting to know, because I've heard different things about, like, this is covered, this is not covered. I think you mentioned earlier that pandemics are not covered under certain contracts.
So they are, just in terms of being quarantined, if you're under quarantine and you're not sick or anything like that, it wouldn't just pay for a pandemic. You need to be suffering an income loss due to a diagnosed illness or injury. So if you have coronavirus, if you are suffering the effects of that and you've got a diagnosis from a medical team, then I would say if you can, start the waiting period process, get the claim going. You may be recovered before your waiting period ends. That would be a good thing. Mm-hmm. But there are complications from this too, is what we're seeing. So, it's still new. So there's a lot to be left to unfold. But at the same time, it pays to get a jump on it and ensure that you're doing the right thing for your family or your business to keep the income stream coming.
Fantastic. Well, so we need to wrap up. I think probably it would be great to continue this conversation on another podcast episode. So where can people learn more about you and what you're doing?
Yeah, so I think LinkedIn is probably where I'm most active right now. You can find me at Maxwell Schmitz. And I would say, our website is always a good resource for information, and will be even more as we gear up for Disability Insurance Awareness Month, where we're going to build out a nice campaign of videos, digestible videos. That's the name of the game these days, is making sure we can sustain interest around disability insurance for 10 minutes. It's a harder task than it even sounds. So.
Oh yeah, that's true. Not top of everybody's list. Well, Max, thanks again for joining me. It's been a pleasure to have you on.
Thank you.
Yeah. And thank you, everybody, for listening to the Get Ready with Tony Stewart podcast. Please be sure to subscribe. See you next time.